The government of St Kitts and Nevis had deactivated fugitive businessman Low Taek Jho's passport in June this year. The government had done so through Interpol after a broad media and criminal database check, the St Kitts and Nevis Observer reports. The report stated that it had come to the attention of the St Kitts and Nevis government that the US Department of Justice had indicted Jho Low for laundering billions from 1MDB, among others. According to the Observer, Jho Low had become an economic citizen under ex-PM Denzil Douglas's administration in 2011, but has never actually set foot in the country. Immigration records show that Jho Low has never entered any ports in St Kitts and Nevis. As such, St Kitts and Nevis PM Timothy Harris's administration decided to deactivate Jho Low's passport. The report states that before the application is approved, the Citizenship by Investment Unit under Team Unity does a broad check of media and criminal databases. Jho Low, however, continues to maintain his innocence. Public Bank has teamed up with Revenue Group to launch an all-in-one digital payment terminal, which will be available from tomorrow. Public Bank MD and CEO Tan Swee Teh Alex says this would enable merchants to accept both card and mobile wallet payments at a single terminal. He says that the bank will continue with its strategy of increasing its merchant base and adding on more new acceptance services. As at end September, Public Bank has more than 60,000 EDC terminals nationwide. Revenue's terminals will be able to handle mobile quick response or QR code payment services. This includes Alipay, Touch 'n Go, UnionPay QR and WeChat Pay, as well as card payments such as Visa and MasterCard. Revenue MD and Group CEO Eddie Ng Chi Siong says the group is committed to developing innovative products and solutions that will help its customers to grow their businesses. Ng adds that the partnership with Public Bank is expected to be one of the main contributors to the group's double-digit revenue growth target for FY19. Bank Negara has left its key interest rate unchanged at 3.25%, which was widely expected. This is against a backdrop of expected low inflation for 2018. The central bank has kept the benchmark OPR at the current level since January 25th, when it raised the rate by 25 basis points. However, BNM warned in a statement that headline inflation in 2019 is projected to increase due to higher expected global oil prices and the floating of domestic fuel prices. BNM said that while the impact of the consumption tax policy would contribute to higher headline inflation next year, it would lapse towards the end of 2019. In regard to the Malaysian economy, the central bank said the latest indicators point towards continued expansion in private sector activity. It said that private consumption will remain the main driver of growth, supported by conducive labour market conditions. However, public spending is likely to weigh on growth amid continued reprioritisation of expenditure by the government. FNHoldings saw its fourth quarter FY18 net profit skyrocket over 300% to 81.2 million ringgit, compared with 19.6 million ringgit the year before. Top line improved 2% to 996.6 million from 976.3 million ringgit last year. According to FNN, the better numbers were due to improved local trade execution and higher export sales. FNN announced an interim single-tier dividend of 30.5 cents per share. On a full-year basis, FNN saw its FY19 net profit grow 19.1% to 385.1 million ringgit from 323.4 million ringgit, while revenue remained rather flat at just over 4.1 billion ringgit. Chairman Tunku Said Badaruddin Jamalulail said the results were driven by strong fundamentals and clear focus on long-term growth. He said that moving forward, FNN's focus will remain on ensuring continuous and sustainable growth for its three pillars. The three pillars are FMB Malaysia, FMB Thailand, and exports. On the upcoming sugar tax, FNN said it would assess and monitor any impact and take the appropriate actions as necessary. Country Heights Holdings shareholders have given their approval for its proposal to issue its own initial coin offering, or ICO. It will be called Horse Currency and will be backed by Country Heights' existing assets. Founder and Chairman Tan Sri Lee Kim Yew says shareholders voted overwhelmingly in favour of the cryptocurrency at its EGM today. He says that the next step would be appointing a technology partner and setting up a task force in charge of its blockchain venture. He adds that the task force would also look at the application of blockchain technology not just for the ICO, but also to be applied to some of the group's other operations, such as automotive and hospitality, among others. The group would also engage with the relevant authorities, namely the Securities Commission, Bursa Malaysia and Bank Negara, to ensure everything is above board. Country Heights has proposed to issue 1 billion of horse currencies, backed by 2 billion ringgit worth of the group's assets. An initial 300 million of horse currencies would be open for circulation to the public.